All right, welcome to Rock Daily Talks, where we break down finance and personal growth and steps you can actually use. Today, we're tackling something that's absolutely essential if you want to secure your financial future, and that is investing. And here's the best part. You don't need some Wall Street wizard to get started. You just need to start. Now let's clear up a big misconception right off the bat. A lot of people think investing is only for the rich, or those who already have stacks of financial knowledge. But that's just not true. Investing is for anyone, and it's one of the most important tools you've got, no matter where you start from. So why should you start investing today? What makes it so critical to your financial health? And the real question, how can you get started if you're new to the game? We're going to cover that and more, so stick with me. I get it. Investing can seem overwhelming, especially if you're just dipping your toes in. There's a lot of jargon, you could feel like you need a finance degree just to keep up. And here's the deal. Time is your biggest ally when it comes to building wealth. The sooner you start, the more you can tap into the magic of compound interest. So let's break it down. Compound interest is basically the interest you earn on your initial investment, plus the interest that's already been added. It's like a snowball rolling downhill. As it rolls, it picks up more snow, growing bigger and bigger. The longer you let it roll, the more it grows. In financial terms, the longer you're invested, the more your money grows. And that growth compounds over time. Here's an example. Let's say you start investing $100 a month at the age of 25. And your investment earns an annual return of 7%. By the time you hit 65, you could have had over $240,000. But if you wait until you're 35 to start, you'll only end up with $115,000 by the age of 65. That's almost half as much just because you started 10 years later. But this isn't just about the numbers. Starting early helps you build the habit of investing, making a natural part of your financial routine. It teaches you patience and discipline, skills that are crucial not just in finance, but in life. Think of it like planting a tree. If you plant a tree today, in 10 years, it'll have grown, providing shade, bearing fruit, or just making your yard look better. But if you wait 10 years to plant it, you miss out on all that growth. Investing is the same way. The earlier you start, the more time your investments have to grow and compound. One of the biggest reasons people shy away from investing is the fear of losing money. And hey, that's a real concern. The market goes up and down, but here is something to think about. Historically, the stock market has always trended upwards over the long haul. Let's put this into perspective. Since the S&P 500 started, which is the benchmark index of 500 of the biggest companies in the US, it's returned an average annual return of 7 to 10%, depending on the time frame you're looking at, of course. Sure, there has been crashes and dips along the way, but overall, the direction has been up. The key here is to not get caught up in the short-term noise. If you invest wisely and stick with it for the long run, you're likely to see positive returns. In fact, sitting on the sidelines and letting your money collect dust in a savings account could be riskier in the long term, especially with inflation slowly chipping away at its value. It's crucial to remember that risk is part of the game, but there are ways to manage it. Diversification, spreading your investments across different types of assets, is one of the smartest strategies. By diversifying, you reduce the impact that any single investment can have in your overall portfolio. Let's explore this further, the idea of diversification. Think of it like preparing a balanced meal. You wouldn't just eat bread or just veggies. You'd want a mix of proteins, carbs, and healthy fats to keep you energized. Similarly, in investing, you don't want all your money in one stock or even one industry. By spreading your investments across different sectors, asset classes, and even regions, you're not putting all your eggs in one basket. This way, if one investment tanks, the others can balance it out, reducing your overall risk. Here's the thing. Investing isn't just for the wealthy or those who want to spend all day glued to financial news. It's for anyone who wants to build a better future. And the good news? You don't have to go at it alone. There are tons of resources out there that make investing accessible to everyone. Take index funds, for example. They're one of the easiest and most effective ways to start investing. An index fund is a type of mutual fund that tracks a specific index, like the S&P 500. When you invest in an index fund, you're essentially buying a small piece of every company in that index. It's an easy way to diversify your investments and lower your risk. But that's just the tip of the iceberg. Today, there are tons of platforms and apps designed to make investing easier than ever. From robo-advisors that automatically manage your portfolio based on your goals and risk tolerance, to apps like M1 Finance that lets you invest in fractional shares, the barriers to entry have never been lower. For instance, robo-advisors like Betterment or Wealthfront can help you get started with just a few bucks. They use algorithms to build and manage a diversified portfolio tailored to your risk tolerance and goals, taking a lot of the guesswork out of investing. And if you're someone who likes a bit of control, platforms like M1 Finance let you create custom pies of investments, so you can allocate your money exactly where you want and how you want. These tools are making investing accessible even for those who don't have much time or knowledge. So, how do you get started? First, think about your goals. Are you saving for retirement? Are you looking for a down payment for a house? Or are you just looking to grow your wealth? Your goals will help guide your investment strategy. Next, choose an investment platform. There are plenty out there, and I'll link a couple in the description. Like M1 Finance that makes it easy to get started if you're a complete beginner. You can start with as little as $100 and gradually increase your contributions over time. And here's a kicker: consistency is key. Even small, regular investments can add up over time. Finally, don't be afraid to ask for help. Whether it's consulting with a financial advisor or doing some research on your own, the more you learn, the more confident you'll be in your investment decisions. There are plenty of online communities and resources where you can learn from others and share your experiences. And here's something crucial: investing is a marathon, not a sprint. It's not about getting rich overnight, but rather about building wealth steadily over time. By consistently investing, even when the market dips, and especially when the market dips, you're letting your money work for you. It's all about playing the long game, letting your investments grow and compound year after year. To wrap things up, investing is one of the most powerful tools you have for building wealth and securing your financial future. And the best part, you don't need to be a financial guru to get started. You just need to take that first step. Remember, the best time to plant a tree was 20 years ago. The second best time is now. So why wait? Start today and let time work in your favor. So guys, if you're looking for some investing platforms, you can check out the description of this video. I have a couple linked. Some of them include getting free stock backs or are just awesome platforms to use. If you want some free stocks, definitely check out the ones where I mention free stocks for applying. Anyways, until next time, rock the elite.